Hello investors and traders, and welcome to Master Trader, where you can learn to use simple market and stock analysis to make money investing and trading. I'm Greg Capper. Today I'm going to talk about moving averages and the way to use them. If you've been struggling trying to make sense out of technical analysis and indicators, stay tuned and listen to what I'm going to tell you. Here we're looking at a chart of Apple, widely followed stock, of course. And this is the way a trader would be looking at Apple, with the attitude of looking for the holy grail as it relates to moving averages. They probably use other indicators. They probably use trend lines as indications of breakouts or breakdowns or trend changes. They look at moving averages as crossovers. They look at moving averages as actual support and resistance. They look at moving averages from the point of view of whether it's a buy or a sell. They also look at them from the point of view of combining simple moving averages with exponential moving averages in an attempt to catch every turn as it relates to a moving average. It's impossible, it's unnecessary, it's subjective, and it's misleading. And why I call this a spaghetti screen. Add some indicators to it, and you really have a real mess on your hand, lined up with trend line breaks or whatever else is going to be put on here. It just leads to mass confusion. I can't say I avoided any of that in my early days trying to learn technical analysis. I didn't. But eventually I realized that all of this was misleading and subjective. And after trying to make money with it, I decided to remove all of this from the charts. I'm going to show you a chart with a couple of moving averages on it, but how I would say a master trader uses it with common sense, not from the point of view of this line being an area of support, or if it breaks it, that the trend is over. And notice the values, 821. I'm surprised there isn't a 34 as it relates to Fibonacci numbers. Do you really think that changing the number as it relates to what a mathematician did centuries ago is going to tell you the direction of a stock, a market, a commodity, or whether it's support or resistance? This is all hocus pocus type of thinking. Get away from it. Let's look at a simple way of interpreting moving averages. So here's Apple with a simple 20-period moving average, a simple 50-period moving average, and a simple 200-period moving average. Why those? Because they're the most widely used by institutions as reference points to buy and sell, especially the 50 and the 200. I'm not saying they're right, but the big money follows these, so why not us as well? Now you could see how prices just slashed right through the 50 MA like it wasn't there. Obviously sellers were in control, and then it stalled at the 200 MA. They use these moving averages day in and day out on a daily time frame. As they relate to another time frame, they can be totally meaningless, but on a daily time frame we know that they're widely used. Okay, so we look at the slope of a moving average as a visual aid as to how prices are trending. Are they far away from the moving average? Is the 20 MA far away from the 50 from the 200? Again, it gives us a visual aid as we flip through one stock to another stock to various markets. The picture jumps out to us as a master trader as to whether the stock is extended or not. We can look at this without the moving averages. It just helps speed up the analysis in the same way candlesticks do. We don't have to use a candlestick chart. We could use a simple bar chart, but candlesticks help speed up the analysis. What do these PH and PL mean? Pivot high, pivot low. And they're just marked off. And what they simply tell us is that there are multiple bars to the left and to the right of that pivot or swing. Now, the way I use this in a very simple way is it making higher highs and higher lows based on swing highs and swing lows. And if it's doing that, it's in an uptrend. If it breaks down what we call major support, the swing low prior to the higher high. It's no longer in an uptrend because it's not making higher highs and higher lows. So what we see happening here with Apple is that it's pulling back toward this major support. It's still in an uptrend. I know it's made a lower high here and a lower low, but it's still above major support. So we are looking for Apple sometime next week, as long as it stays in this area, to turn around and move back up, regardless of the fact that it's below the 20 MA. It doesn't mean anything. It's just a guide, as I've explained. So Apple is above its major support point. This consolidation where it broke out from, it's pulling back into that area of support. We're going to be looking for this to turn around next week to move higher. If it doesn't and it breaks under these lows, it's no longer in an uptrend, and that begins to suggest that Apple has failed and is likely to pull back to where institutions will look to buy it again at the 50-period moving average. I hope that helps. Have a great weekend. Happy Father's Day to all the dads. Visit Master Trader, and we'll talk soon.